YouTube, what's good? It's Chris Baker. Now, I know you probably been hearing all the hype about Robinhood and GameStop, and you probably already downloaded a Robinhood account or maybe even a Webull account, and you're trying to get in on the action. So now that you got the Robinhood account and you've linked it to your bank account, you're probably asking yourself, what do I do next? So that is the point of this video. So before I go any further, if you're new to investing and you want to build another stream of income on your path to financial freedom, be sure to like, comment, and most importantly, subscribe to the channel. When you do that, that lets you know when a new video is being uploaded. And when it comes to markets, knowing the latest is the difference between making money and losing money. So please be sure to subscribe. As a new investor, it's imperative that you always know what's going on. You should always keep your ear to the street. And if you're new, and I assume you are, you should know that the number one most valuable thing in investing is information. Quick disclaimer, I am not a financial advisor. I am not a lawyer. This isn't financial advice that I'm giving. These are just opinions and a summary of the events that happened over the past week. In the situation regarding GameStop and Robinhood, it'll be a perfect example of how information, along with new markets and technology, can make you rich and at the same time take down a large financial institution. Now, GameStop is a business that's been on the decline for a while now because its business model is centered around selling physical copies of games, and with console companies like PlayStation and Xbox having digital downloads, this has had a significant impact on GameStop's business. So with this in mind, large financial institutions saw a huge opportunity in GameStop's quote-unquote decline, that they went and made large bets that GameStop will go out of business, just like Blockbuster, which ultimately will make those institutions and the people that they manage money for richer. So here's where it gets good. So for decades, large financial institutions like Fidelity, Charles Schwab, TD Ameritrade, and companies like that have essentially been the gatekeepers of entering financial institutions. And if you try to walk into one of those buildings and you wanted somebody to manage your little $300 portfolio, you'll essentially be laughed out of the building. These institutions make billions managing the wealth of the super rich, and they charge fees for commissions, sharing trade strategies, and also sharing data analytics software. And if you're super wealthy, you can be included in hedge funds where the pools of money are so large, a 2 or 3% increase in the equities in the portfolio can mean tens of millions of dollars for everybody in the fund. Fast forward, then comes in your online brokerages. You have your Scottrade, you have your E-Trade, which essentially make money the same way as the older firms did. But now you have online brokerages that are coming on the scene. There's more competition. And what ends up happening is trading fees are reduced more and more. So enter Robinhood and companies like it, where there are zero trading fees and commissions. Basically, you can buy and sell stocks and crypto as much as you want for free. And the way that Robinhood makes money is through their premium services package, where you can use their data analytics software. But the primary way that they make their money is through executing trades for a third party. And that third party fulfills the trades. It's called payment for overflow. And it's kind of controversial, but that's neither here nor there. The primary takeaway is that with the introduction of Robinhood, it allowed for tens of thousands, maybe even millions of average Joes like me and you to buy and sell in the stock market on your phone, which is a game changer. Now, let's get back to the idea of information and why it's important. Now, there are online forums that discuss topics like what's the next big stock to invest in, trading strategies, crypto, all kinds of topics. And these forums are no different than the TV shows you see on TV, CNBC, Fox Business. So the forum regarding this story is Reddit's Wall Street Bets. It has 3.5 million users, and if these users band it together, they can move markets. And That's exactly what happened. So there were essentially three things that caused the perfect storm that obviously Robinhood wasn't prepared for. The first being financial institutions taking huge bets that there would be a decline in GameStop's value. I mean, it kind of makes sense. You have uh, large companies, gaming companies that are moving to digital downloads. You have a pandemic, and then you just have an overall shift to online retail. I mean, anybody could guess that GameStop's writing was on the wall. So there were millions invested into put options to short the stock. The second thing in the perfect storm was the recent positive events relating to GameStop itself. During this time, there was a dramatic increase in online sales. The company took on investors and also switched up its management team, and it also inked a partnership deal with Microsoft. So with the events happening now, this was the beginning of a pivot, and one could assume that the company was actually worth more than what it was perceived. The third thing in the perfect storm was when the folks at Reddit Wall Street Bets found out about the millions to short GameStop. In fact, the institutions shorted more stock than was actually available. And that's another video, so subscribe. So these guys in the forum banded together and they bought significant amounts of GameStop, which caused the stock to skyrocket. So the third thing in the perfect storm was when the folks at Reddit Wall Street Bets found out about the millions to short GameStop. In fact, the institutions shorted more stock than was actually available. And that's another video, so subscribe. So these guys in the forum banded together and they bought significant amounts of GameStop, which caused the stock to skyrocket. So now you got two sides. On one side, you got the large institutions and hedge funds shorting the stock. On the other side, you got retail traders from Reddit's Wall Street Bets forums pouring money into the stock. And then you got poor old little Robinhood stuck in the middle. One thing to note is how put options work. Essentially, if someone, in this case, hedge fund managers, think that a stock is going to go down, they can go buy put contracts. And if the stock goes down, they make money. Obviously, this is like an oversimplification, so I can make a video going into more detail, so make sure you subscribe and like. Now, the dangerous thing with put options or options in general, if a stock goes in the opposite direction of where you think it's going to go, that can be very, very dangerous. You can lose money, and more so, you can owe money. If you trade stocks, the most you can lose is what you put in. But if you trade options, you can lose your lunch and more. About a month ago, GameStop was trading at about $17 per share. Now, currently, it's trading over $300 per share. That's a 1,500% increase. So if you would have bought $1,000 worth of GameStop last month, it'd be worth $15,000 right now. That is crazy. And with this stock rally, the hedge funds that bet millions to that the stock will go down are poised to lose actually billions when the contracts expire. And this is called a short squeeze. I know, another video. So this is free markets in America, folks. This is the little guy sticking it to the man. And this is why the app is called Robinhood, right? Wrong. When all this is going down, Robinhood, they put a halt on trading GameStop and a few other stocks. You can sell out of your position, but you couldn't purchase any new shares on the platform. And when this happens, it artificially drives down the price of the stock, which is a good thing for the hedge funds. At this point, the hedge funds have lost millions already, but as the price goes down, this is less money that the hedge funds are potentially on the hook for. Here's where things get a little fishy. So if Robinhood is supposed to be for the little guy, why are they halting trading? I mean, it seems like they're looking out for the big institutions, right? Why would they even do that? So here's my take on it, and follow me for a second. So as I mentioned before, Robinhood makes its money by facilitating trades that a third party fulfills. And that third party is called Citadel Securities. In other words, Citadel pays Robinhood to go out and find people that want to buy and sell stocks, and Robinhood sends their trades to Citadel where they are fulfilled in the stock market. So in other words, Robinhood works for Citadel in a way. Another plot twist. It was reported that Citadel recently bailed out a large hedge fund that was, wait for it, on the wrong side of that GameStop play to the order of billions of dollars. So it seemed that Robinhood manipulated GameStop to help out its employer, to help out its hedge fund buddies. And that's why there is currently a class action lawsuit being filed against Robinhood and maybe against Citadel. Based on everything that's going on, it's real easy to point the finger at Robinhood, which I get it. You know, they stopped the little guy and the man won again, right? But I'm pretty sure there's some factors that we are not even considering right now. One potential one is margin. And when options go too far in the wrong direction and the account goes too far in the red, the broker can require that the client submit more funds to lessen the potential losses in the account. And this is called a margin call, which is a great movie, by the way. And I assume this is pretty much what happened to the big hedge funds that shorted GameStop. The CEO of Robinhood claims that there weren't any influence by Citadel or any financial institution to halt the trading of GameStop. So in fact, the halt of trading for GameStop happened on other platforms as well. And I can see this being true. And not to get too deep into the weeds, but anytime you buy or sell a stock, that transaction doesn't happen instantly. It takes about 2 to 3 business days for that transaction to be cleared and recorded. So a quick side note on the topic of transaction transparency, stick around to the end of the video and I'll be going over investment opportunities in this space, a new technology centered around transaction transparency. So please stay tuned for that. So what if the person you sold the stock to goes bankrupt over those 2 days? The brokerage can potentially be on the hook for fulfilling the trade, and if the price increases dramatically, the brokerage nor the clearing company has the reserves to cover the transaction. So literally, as the price of GameStop rises, the company fulfilling Robinhood orders has to rob Peter to pay Paul. Paul being the retail investors and Peter being the hedge funds in the red from GameStop shorts, put options. Ultimately, if folks kept buying GameStop shares, increasing the price, Citadel is shooting themselves in the foot because every time a buy trade is fulfilled, the more money is owed to them by the hedge funds shorting the stock. And if the hedge funds can't cover the margins, then they go bankrupt, which in turn will result in Citadel holding the bag, which can make them go bankrupt. And if Citadel goes bankrupt, then that makes Robinhood go bankrupt. So essentially, it's kind of like a domino effect. I mean, what do? You live to fight another day, essentially. You halt the purchases of GameStop. You ultimately want to keep the lights on. I get it. At the end of the day, it wasn't a win for the little guy. It was more of the status quo. But as a result, I mean, people are pretty upset about this and they're speaking out. You got major influencers like Chamath Palihapitiya, you got Elon Musk, and even some folks in Congress saying that this isn't right. People are even leaving Robinhood. They're transferring their accounts to other brokerages. Even right now, currently, Robinhood is still limiting orders on certain stocks, and it changed its policy on funding its accounts to buy cryptocurrency. You can't use instant cash to buy cryptocurrency right now. So at the end of the day, as an investor, you just need to stay in the know. And that's why I'm doing this. That's why I'm doing this on this channel, helping you guys stay up to date on what's going on in the markets, the economy, and just providing education on relevant topics to just help you guys make more informed investment decisions. At your own risk, though, of course. I'll also be showing some of my trades, my positions, and why I'm making them. Also, we're going to be doing some market research on some new companies that I'm thinking about investing in. So make sure you subscribe to the channel. So at a minimum, you'll at least know and have a grasp of the basics. Now, remember earlier in the video when we were talking about transaction times to clear a trade and how that hinders the whole trading process? What if those transaction times were reduced to 0 and they happen instantly? Well, folks, one word: blockchain. And that is definitely another video. But it's going to happen in the near future, and it is going to be a game changer. So you need to know how to invest in blockchain now so you can ride that wave to millions. Yes, I said millions. And that's why this channel is called Flight School, so you don't get left behind in investing. So until the next time, holla. Peace.